Hello everybody, this is Gabriel, and this is part 2 of the Eurodollar analysis. I think it's a really great example to talk about that and demonstrate how the inner working is of these charts and the levels and the patterns basically. So we've part 1 was a couple of days ago, and I basically talked about the weekly, like the weekly is overextended. We have these rejection bars on the top that are basically touching the target area. So this is fulfilled. We see a touch of the big number, and price shies away. So that tells me that the bulls, the strength of the bulls is not, they've basically lost their energy, and they cannot push prices higher because this resistance area, the 120, is sufficient for prices for the bulls to shy away. So now the bears are getting stronger and stronger because there's this energy, like this pull towards the moving averages, the further they're apart. So I'm expecting, so on the weekly I've got a bearish bias. And the same is actually true here for the monthly, that is way over extended, and it finds here, well, we can even see it better here. It finds resistance at the big. It's a very big number with 3 zeros, right? The 2000. It's far away, and we could easily come back and touch the 115 level. So that's coming from the monthly and the weekly perspective. And let's have a look at the daily. So the daily was a chart that looked really bullish. And I talked about, I think it's a couple of days ago, it was right here, and I said, price is actually finding a strong support on the 21, because this is a strong and smooth trend. So the stronger and the smoother the trend, well, the stronger becomes the 21 support, and we can see it. We can actually see it very, very well here. How the bars are bouncing off the 21, both 21 and 8. So the bar bodies are getting squeezed right within the band. So this shows you how important this band is, the 821 EMA band. So this is the first bar that is actually closed slightly beyond the 21. Well, this bar is basically testing the support of 21, and we see a bounce back. Right. This is why I said I don't want to go short here, because this is strong support, and we might actually exactly get what we see here. This strong uptrend needs to be turned around, and it's usually not done within one go. Here on the 240, well, we are in the sideways range, and I've drawn here this stop run move, right? Because we have got these consecutive levels of lower lows. And this one actually tried to run those lows, right? To make a stop run move. Well, it was not successful, right? So we've got a double level here. It just tested this area, and it couldn't. Like the bears couldn't drive prices lower. So what happens? Well, there's a bounce off, and that's typical. Well, that's what you typically have in a sideways price activity, as we see here, and in the 240. It's kind of a topping formation, right? And we've got the bounce up, and now we can actually expect another trial of this level on the bottom. So we have got these stop run levels, and whenever price is actually able to break, let's just move this level so that becomes the important level. Whenever price is able to push below this one, well, then we might actually see that this gives away on the daily, that the 21 gives away, and that we might drop quickly to the 115 level, which is in line with the weekly and the monthly. Now we've talked about the lower boundaries and the magnet levels on the low side. Let's have a look now on the upper side, because it's really it's set up really nicely. Well, obviously on the daily, a very clear level is this wick, the top wick. If this top wick gets broken higher, which is as well at an important level at the 2000, what's the level we talked about before. So if this high gets broken, well, then we can actually see another run, because what you see here on the daily, that's basically a sideways consolidation. That's a consolidation, right? And a consolidation is trend following in nature. So this is our momentum move. This is a consolidation. Well, it's neither S1. It could develop into S1, but it's not not yet. So that's a momentum move, that's a consolidation, and we can expect a second leg higher, but only obviously if this upper wick gets broken. Now with this down move, this week of successive down move, well, we can see it better here on the 60-minute chart, right? And then 60-minute, well, I've plotted here these S1 levels. That was coming from the 5 minutes, and we can, yeah, get a better overview on the 60 minutes. So I've plotted those levels. As you know, these are very important levels. That's kind of, just bring it a little bit lower. That's basically very emotional, important levels of pain, right? And price goes and tests those levels. Where we didn't see a lot of reaction here, it just broke through, and then we have got a wick that comes to this level, and obviously very clear, right? We have a touch where it comes very close to this level, and then it falls apart. So I'm just marking that as well. Right, so that's a touch of an important level. So when the bulls are able to break those three resistance levels, well, they are the resistance levels as you're coming from below. It's just a test of these levels, right? So price has been able to break through the first two. Now it bounced off the third. So for me to actually get I'm still bearish, right? But for me to get bullish on the euro dollar chart, well, the bulls have to show strength. So they have to actually break the third level. If they can, well, it might look like this, like there's a spike up, and then it might come back and test this resistance that then becomes support from above. I'm not expecting here a spike going through all of this. So first is a break of these three levels, then we might see a pullback to test that level, and then obviously the final test will be, well, this level here above the wick high. I might already take early long positions in this space here if there are patterns setting up, well, similar to these. Maybe we get some long patterns in this area. So this would basically mean a front running this breakout. If there's no pattern, well, that's fine. And then I'm getting fully bullish. I'm getting fully bullish when this important wick, right? It's a very important wick, a very pronounced wick. If this wick gets broken, well, then I'm fully bullish, and then I actually have to completely change my point of view. And then my point of view will be, well, this is a trend following consolidation, and then we can actually trade this long. But just remember, these patterns here, these S1 patterns are short patterns in an early downtrend, and these are very strong indications that we actually have initiated a medium-term a downtrend. So a downtrend in the way that we actually come back here to test the moving averages. So this conviction comes from these S1 short patterns, right? And I only turn around, I only eliminate this short bias if the bulls can break these levels and then actually find support, and then it's basically a failure of this early downtrend coming from those S1 patterns. So it's great that they have been developed, right? They provide great levels. Levels you can actually see how strong and weak the bulls and bears are. This is a very exposed level, so it's great. It gives us a great conviction that there's going to be follow through, right? And on the bottom, well, we've got a great level. This came really very close to break this level here. And if this gets broken, well, I'm fully convinced that we're actually going to see a quick move lower, and that's tradable. And anything above this level obviously is tradable. And if we see strength coming in this area, well, it's tradable on the long side too. So long term, I'm super, let's just look here on the monthly just to get, remember that. Long term, I'm very bullish because this is a momentum move. This is a very long, many year long, it's basically 10 years long consolidation. It's kind of an S1 pattern, right? It tried to break here, rebroke, failed, and now there might be another trial, and this might actually, if this is a second leg, and the red bar is the consolidation, well, a measured move brings us above the green line, and that would be a rebreak. If that happens, we can expect a momentum move of this extent, and this should bring the euro dollar to 180 or even 190 level. So that means the dollar would get very weak, and then we would see an explosion in commodities and especially precious metals that would basically turn around the whole big picture view. And if you want to learn more about a big picture view, next Tuesday I'm actually holding a Q&A webinar and talking about big picture of different asset classes for the next 5 to 10 years. All right, thank you.